Welcome back to the channel, everyone. Today is the start of a new T+35 cycle that lasts for the majority of next week. So today in this video I want to explain what T+35 actually is, how it's going to impact the AMC stock, if they can circumvent it, and what we should expect. So stay tuned and let's make some money. But before I dive into the video, I just want to give a massive shout out to the 3,400 of you that have currently dinged that notification bell, because you guys are always the first to watch a new video as soon as it's released. So guys, be sure to drop a like down below, subscribe to the channel and ding that notification bell if you haven't already, so that you don't miss another video just like this one. And now I want to dive straight in with the key information. So, T+35 explained. Hedgies have to make good on their failed delivers within 35 trading days. They always wait to the last minute in hopes that the share price drops before they cover. Now, it just makes sense to cover all at once, right? So let's take a look here. The green arrow is April 15th, a noticeable spike in failed to delivers. They covered all of the failed to delivers in the red box area at the same time, 35 trading days after April 15th, which happens to be June the 3rd, the blue arrow. The closing share price on June the 3rd was $62.55. 35 trading days from the purple arrow spike is August the 6th, tomorrow, or today. It should be interesting. Now this post isn't quite accurate, because all of these aren't individually reported failed delivers. Well, they kind of are, but kind of aren't. Basically, you don't add all of these failed delivers together and create a cumulative amount of, say, 35 or 40 million failed delivers. They're all individually separate days. So you had a spike here on April 17th of failed to delivers, but by April 18th the failed to delivers were covered or transferred. Obviously just transferred. Now I guess that is potentially similar to what happened in June. You could have had all of the failed to delivers on June 18th transferred and then just more failed to delivers on June 21st. Or maybe they didn't transfer any of them and only incurred a small amount extra. We'll go through it in more detail a little bit later in the video. But first I want to do a bit of a better job on explaining that T+35 cycle for newer apes. So obviously a failed to deliver is created when you buy a stock or exercise a call option, but the market maker does not deliver these shares to you. If you have an in-the-money call option and exercise it, the market maker who sold you this call is required to deliver 100 shares to you. However, sometimes market makers don't deliver these shares and instead give you IOUs, which are called phantom shares, since they aren't actually real shares, but synthetic ones. The IOUs are not part of the float and must be replaced by real shares. To you, the shareholder, it looks like you've got 100 shares, but in actuality, you own phantom shares or synthetic shares, and the market maker still needs to deliver 100 shares to you to get rid of those 100 IOUs. And if the share isn't delivered within 2 trading days, a failed to deliver is created. A failed to deliver can also be created on the flip side if somebody wants to short some shares, but they can't locate the shares to short. They take out the short position, and there's effectively a failed to deliver created from the market maker because they failed to deliver those shares to be shorted. T+35 and its importance. When a failed to deliver is created, the market maker has 35 calendar days to deliver this share. Regulation SHO says that the failed to delivers have to be covered before regular trading hours on the 35th day after the failed to deliver cycle. So if they don't deliver these shares within 35 days, they're in trouble. The failed to delivers are often covered on the last day, 34 days after the failed to deliver was initially created. But I was also wondering how this T+35 cycle interacts with the threshold securities list, because obviously if a stock is on that threshold securities list, it has 13 days to cover the shares and be removed from the list, or they're forcibly covered. But I managed to find this post on how there are exceptions to the T+13 deadline if the stock has been grandfathered in. If a participant of a registered clearing agency has a failed to deliver position in a threshold security for 13 consecutive settlement days, the participant shall immediately thereafter close out the failed to deliver position by purchasing securities of like kind and quantity. Provided, however, that a participant of a registered clearing agency that has a failed to deliver position at a registered clearing agency in a threshold security on the effective date of this amendment, and which, prior to the effective date on this amendment, had been previously grandfathered from the closeout requirement in this paragraph, shall close out that failed to deliver position within 35 consecutive settlement days of the effective date of this amendment by purchasing securities of like kind and quantity. So what does it mean to be grandfathered in? It means that if the failed to deliver happened before the security was placed on the threshold securities list, and it was grandfather due to a reason in section 242.2, then it can still deliver the shares on the T+35 schedule. The below are summaries of the exemptions that could have allowed them to have a T+35 settlement date prior to the threshold start date and remain on that T+35 settlement date instead of the T+13 or 13 consecutive day settlement date. If the person who has the fail to deliver is in an unconditional contract binding both parties to purchase but has not received the security, it can now extend for 35 days. Or the person owns a security convertible and has tendered such security for conversion or exchange. Or the person has exercised an option but has not yet received the shares. Or a person holds a securities futures contract. Basically, an arrangement with a person that they will buy X amount of the stock on some date in the future and the contract cannot be broken. Or ETF malarkey. The terminology is confusing, but there's a way to extend FTDs to T+35 using ETF unwinding. The broker-dealer is unwinding index arbitrage positions involving a long basket of stocks and one or more short index futures. So now we can see that actually a lot of these market makers can escape the T+13 cycle or the 13 calendar day cycle if there was a previous agreement beforehand, which there most likely was, as they went through all of this back in May and January before that. However, the reason why they can't escape from the T+35 cycle is as follows. If a participant of a registered clearing agency entitled to rely on the 35 consecutive settlement day closeout requirement contained in these paragraphs of this section has a failed to deliver position at a registered clearing agency in the threshold security for 35 consecutive settlement days, the participant and any broker or dealer for which it clears transactions, including any market maker, that would otherwise be entitled to rely on the exception provided in this paragraph of this section may not accept a short sale order in the threshold security from another person, or effect a short sale in the threshold security for its own account without borrowing the security or entering into a bona fide arrangement to borrow the security until the participant closes out the failed to deliver position by purchasing securities of like kind and quantity. This is saying that if a participant was grandfathered into the T+35, then on T+35 they will not be allowed to accept any short sale orders until they close out of their account. Again, the bottom sentence is important, so if your broker Robinhood has failed to deliver with someone like Citadel, then neither can mark sales as short after the 13 or 35 day settlement cycles. What makes this cycle so important is the fact they absolutely need to deliver the shares within 35 trading days. They have no other option. If there's a lot of fail to delivers, then a lot of shares will need to be bought, which drives the price up. A fellow user asked me to explain what happens when the T+35 cycle ends, but the thing is, failed to delivers are created every single day. So technically the T+35 cycle happens every single day. However, there are days when there are just an absurd amount of failed to delivers. For AMC, days over 1, 2 or even 3 million failed to delivers. Meaning when they're covered, it often results in a big upward price movement. And if we have a look at the AMC chart, obviously we saw this kind of number of failed to delivers in April, but in June we saw actually a much higher and more sustained amount of failed to delivers. So what should we expect? Well, we can expect these failed to delivers to be covered as we're now approaching that T+35 settlement date. That's most likely going to result in upward momentum. Maybe some small amount of failed to delivers were covered yesterday, and that's why we had a good day yesterday. Now, I'm not expecting some kind of giant 500% gain in one trading day, but we can see hopefully another upward movement through Friday, and then next week, Monday, Tuesday, Wednesday, Thursday, and next Friday as well. Is this going to cause the short squeeze or the gamma squeeze? Realistically, I don't know. I can't see the future. I don't want to put a specific date or a specific time or a specific price target for the AMC squeeze, and therefore I don't know if it's going to cause it, but this is definitely a big catalyst. Throughout GameStop and AMC's history, on every single close of the 35-day trading cycle, we have usually seen a good green day. I expect those good green days to continue, and I expect today, Friday, and a lot of next week to contain more green days and AMC moving back upwards. On top of this, the AMC price really seems to have bottomed out around $28 to $30, and therefore it's most likely that it will start moving back upwards. However, I also can't say for absolute certainty that it's going to cause the squeeze that we're all wanting. I don't really want to give anyone false hope. But as always, I will be sure to update you as the week progresses next week with the AMC price and what's going on. Guys, be sure to let me know down in the comments below what you think is going to happen as a result of the T+35 cycle. Are we going to have a green day today and a green week next week? And if you haven't already, I'd really consider checking out the Patreon and the private Discord and becoming part of the team. That way you get urgent updates and news and due diligence about AMC and access to my stock portfolio, linked in the description below. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.